there's definitely a distinction between coaching, mentoring, and advising. Over my career in that, I've done all three. I even do all three with some clients, but I make that distinction of I'm doing coaching now, I'm doing mentoring, I'm doing advising. Coaching is probably the most powerful out of the three that I think that unlocks your own potential within you.
The name of the podcast is Business Done Right, right? And I just want to hear from you, when you hear the phrase business done right, what does that take? What comes into mind?
Well, it's never going to get done right the first time. And I'm laughing also because sometimes it needs to be, most of the time, even with my own businesses and that, you have to do it wrong before you do it right. Yeah, so it's going through all the, I guess it's, in a way, it's a fallacy that you're going to get it right the first time. And you want to, so it's rolling with the punches, rolling with getting all the learnings that you take, build up on that, rolling with the punches, rolling with the what comes ahead of you, and just building up on those pieces.
Right, and with that view, do you think the entrepreneurship ecosystem gives grace to entrepreneurs?
In South Africa, not at the moment. I think in some of the other African countries, like are a lot more graceful and lenient on them. It's a culture piece here. I think entrepreneurship hasn't been always touted as a good thing. It's something that you do when you don't have anything else to do.
Oh yes, yeah.
And I think that works against us because and I know it's changing, but it's not changing at the pace we need it to with the volume of people that to do it. But it's entrepreneurship is a last resort at the moment in South Africa, in the South African context, and that needs to change. We need to be speaking about it more. We need to be changing the mindsets, which is a lot of what I do. You know, working with so I do a lot of founder fortification. The mindsets, the cultures, making failing right. So I live by the principle: fail fast, fail forward, fail often.
Yes.
But also, what I've also and I don't know where it originated from. I think it was one of the Indian prime ministers that came up with the term. First attempt in learning. So I've always taken that principle and I've always stuck with it now.
Yeah.
And if I look at my journey in what I've done, I can attribute every success to a epic failure. And while you're going through that epic failure, it's the worst thing.
Yeah.
But it's building yourself up onto the other side. And so just taking my career right now, where I'm at, I wouldn't be here if it wasn't for a failure.
Right.
Yeah.
Yeah, and maybe let's check on that just for the audiences who are listening and they're wondering, okay, why should I stick around to listen to you?
Yeah.
Right? Or to listen to this episode. Tell us about yourself and then just your journey and what is it that you do.
Okay, so I've been in the entrepreneur space now for the last 2012 I started. So it's going on 14 years now. Before that, I had a 2 decades experience in banking. So going through the whole, well-versed in retail banking, well-versed in running my own department and those pieces there. But it wasn't what was touching my heart. What I took from that there is that I loved developing people. I loved growing their mindsets and that. Mapped with that, I come from an entrepreneurial family.
Okay.
So my extended family, uncles, that they all had their own businesses. They all had started their own things. So even though I was in corporate, I always knew that somewhere along the line I was going to get into the entrepreneur space. So I moved into that space, and it kind of merged together where I'm a servant leader. So I know that the best way that I can help somebody is to make them shine. and it took me through the journey of becoming a certified coach, doing the training, just so that in 2012, when I first started, the first program I did was 10,000 women Goldman Sachs.
Yes, I'm familiar with that one.
And the first 1 or 2 cohorts that I went through there, you realize that you're not just giving advice. You're actually playing with people's lives.
Right.
So what you want to do is you want to do it the best way you know how possible. And that's what took me through to, taking it serious and getting the certifications, getting myself, understanding of the mindset, understanding of the person, what are you working with before you get to the business. And from a curiosity side, I'm a curious person.
Yeah.
And that's what's taken me to all the various industries that I've worked in. Across from retail to mining to banking to fintech, health tech, township entrepreneurship, and that. It is a broad mix. It's also so that broadness also gives you that the perspective, the wider perspective of the world. And the one thing I like, I've learned along my career is to always borrow. So what seemingly doesn't work, or is one industry to another, there's always those hints of brilliance that you can just copy over. Yeah,
absolutely.
And that's why I don't just refine myself or refrain myself to just one industry. And it's
because it's always great to learn best practices of different industries, because you'd be surprised at how creative you can get if you learn from one completely different industry and try and merge that into your industry or the work that you're doing. And as you're a business coach and advisor, and I guess it's good that you then know across different industries. So you at a leadership coach at the Forward Coach, right? Can you tell us a little bit more about what you do there?
So the Forward Coach was that was my creation, what I started, and the whole concept behind the Forward Coach is getting you forward. How do you what's the next level? What's the next step in front of you? And then engaging with the people I work with to just get them to that next step. And there's always there's always a next step. There's always a next step in the journey. One of the old Chinese proverbs or sayings and that is that you have to walk one step before you can get to 10,000 steps. You can't eat a lot of salt. You have to take like a grain of salt every day. Excuse me. So a grain of salt every day, and you can't rush it. So getting you forward was really just that mindset of what's next. Let's get there.
Yeah. And with the work that you do, and I think for a lot of people, they might not understand what exactly does a coach do or a mentor do, an advisor do. What would you say those differences are? And as somebody being an entrepreneur, how do they know what kind do they need at which point in their careers?
Yeah, so there's definitely a distinction between coaching, mentoring, and advising. Over my career in that, I've done all three. I even do all three with some clients, but I'd make that distinction of I'm doing coaching now, I'm doing mentoring, I'm doing advising. Coaching is probably the most powerful out of the three that I think. That unlocks your own potential within you. So it's all about asking the right questions, unlocking your mind, unlocking what it is that what is it that they want to create? What is it what's their agenda? Okay, and the mentoring side is parting of knowledge. So past experiences, what you've gone through, and all those things there. And I always say that mentoring is great. So it's good to learn, but never replicate. So always take the lessons from it, the principles, all those things there, but never replicate. Just take those understandings and do it yourself.
Okay.
So that's why mentoring is great, but I personally think it's got that downfall on that side there. And advising is, the third one, advising is exactly that. It's giving advice. So taking in industry knowledge, taking in everything you know, taking all the factors, and then instead of giving an answer, giving a solution to the business. So that's the difference there. And at different times, as we all are, sometimes we need to be thinkers. Sometimes we just need to be in action, to do it and just be told what to do. Sometimes we need somebody to bounce ideas against, and that's where. So all three of those are valuable in their own right. But building it up when you know when to use what. That's when the power comes in. And over my career, I've learned how to balance that out.
And I think this leads to then you saying you were in the banking industry, right? And then to building a business, being an entrepreneur, doing advisory work and coaching, right? So what would be the gaps that you are seeing from that journey of maybe working with entrepreneurs? What is the gap that founders have? And maybe also just comparing it to corporate or banking being more formal and more structured, and then now moving into a space where it's the jungle. You trying to build something that you yourself maybe don't understand, versus now I come from something that was structured.
The structure piece is definitely a difference between the corporate world and the entrepreneur world. I think in corporates, you've got everything around you. You've got every department, you've got every support team, you've got legal, you've got compliance, you've got marketing, you've got your technical teams, you've got all of those. And you pop off an email and you've got 20 people in a room that are working on an idea. In entrepreneur space, it's not the same. It's you need to hustle. You need to hustle to make sure you get the exact same skills, but you have to build that yourself. It's not necessarily in defined titles or defined areas of expertise in that. It's and what I've learned from the entrepreneur space is that you need to get to know what you are able to do and what you love to do. And I want to separate those two first, because being able to do something doesn't mean that you should do it. Okay? And sometimes when you love something also, unless you can build up those skills, then maybe you don't do it as well. But if you actually then pinpoint what you are good at, then you start surrounding yourself with the right team of people. So strategy, creative, that I'm great at. Okay, I can do the building, I can do the admin side, I can do all those pieces there. But sometimes I should hand it over to somebody else to do. So it's really it's building your teams is very different. I think it's on the entrepreneur side that you get more exposure as well, because you get exposure to you learn more about yourself. Corporate structure, there's a structure, there's a
you already find something in place.
There's a roadmap. So it's corporate is easier. I'm going to say. Entrepreneurship, I think, but I'd always willingly go for the more difficult side of the entrepreneurship side, just because it's more exciting.
And I guess it's just about a person knowing themselves and the kind of thrill they want out of life. Because I've heard conversations with people that are saying, no, I don't have the thrill to start my own thing. I'm absolutely fine at corporate. I don't have any desire to start or build anything from scratch. Whereas there are people who, maybe me and you, who are like, I want the thrill. I want to build something from scratch, and we would never flourish in corporate. But I guess I want to ask then, speaking to the difference then between corporate entrepreneurship, how corporate has those structures and systems in place, how then do entrepreneurs move away? And I think that's also largely part of the work that you do, like building those systems. It sounds like it's a systems issue then for entrepreneurs to start building those systems around them, so that eventually they don't do everything themselves. They don't do things that they are not good at, or even if you're good at something, you don't have to be the one doing it. Because I think we look at corporates today, but we forget that it was started by someone at some point that also didn't have all these structures, but they were able to get it to that point. how do then entrepreneurs, particularly in the African space, get to that point?
So systems are always important. Systems, processes, policies are always important all the way through. Okay. However, the formality of those changes through the life stages. So if you're in the formative stages and that, you're going to have to be creative. You're going to have to challenge the rules in that, because that's part of innovation. Those things there. But once you've got to get into the later stages, the maturity stages and that, processes and systems are going to help you. And you're going to have to formalize them, and you have to get them in. What the systems look like, how you resource them, they're also going to look different at the different stages of a business. When you're starting up, you don't have the financial backends, the resources, all those things there. So you're going to have to rely on what you've got access to. Okay, so nowadays we're fortunate with that, because we've got all the AI tools, we've got all those the technology and all those pieces there. So a lot of those resources that you had to rely on from a person, that a lot of that comes from there. But even on those pieces there, as you're building, okay, it's bringing what you need at that moment, at that time. So contextualize what it is that you are building for this phase. Be clear on what that exit point of that phase is and what you need to get to. So that dictates then, do you bring in outsource resources? Do you go and join an accelerator or incubator that might be able to provide some of those supports for you, or on a temporary basis? Then once you get to the more mature stages, when you pass launch, and then you maybe post revenue, then you can start building, adding those formal teams in, those formal titles in, and building just it's context based. Yeah. So you can't be. I think Discovery is a great example of coming from entrepreneurial side, but you can't take their systems that they've got now and think that as a startup that's what you're going to have from day one. Yeah. Because it's contextually they're two different.
And I think that makes so much sense, because a lot of the times when I work with small business owners, it would be a thing of I keep hearing that I need to build systems and processes, but how do I actually do it, right? And I think it's stemming from the position of, okay, corporates have got systems and structures, and they maybe try then replicate those systems and structures, not understanding where they are at as a business.
Yeah. And it's also about priorities and orders, because systems are relevant at the relevant time. The type of systems are relevant at the relevant time. So you need to also just make sure you know what you need.
And how does somebody then know what they need when?
The biggest, maybe stepping one step back. What you always need to do when you're starting up or launching a business, the first thing I always say to somebody is that your business is going to evolve. Okay, your business is going to evolve in the next 3 months, next 6 months, next 12 months, 3 years, 5 years. Yeah. So evolving. Okay, and what you need to do then is that if you've got that mindset already, you know that your systems are going to evolve. Okay, so what you need to do is I always come back to that Ferrari Toyota analogy. Okay, focus on the Toyotas, focus on what system you need for that phase, and then also know that maybe some of those systems you can evolve and grow into better systems, but some of them you might actually trash and let and remove out. It's also technology in that. Sometimes you can only afford a certain type of tech stack or technology in that to get you to getting yourself in front of investors or getting yourself your MVP out in that. But you also know that if that's all you can get access to, and you know that there's a Ferrari out there, build with the Toyota and then switch over to the Ferrari. So it's evolution. So know that it's not you're going through a journey, and then know where in the journey you are and what the resources are that you should have. What are the systems, the processes, resources around you.
So with your work and the many maybe businesses that you've worked with and businesses that you've encountered, what would you maybe say is the one process or system that they have in place that maybe, let me phrase it like this, a system or a process that you believe every business should have or should start out with? Like when you look at maybe the successful businesses that have grown, what is that one ideal?
I know it's going to sound, I'm always going to say a data room or formalized space where you can actually keep all your documentation, where you, and there's organized, it's organized. Okay. So that anybody you engage with, because I think entrepreneurs, and I'm speaking from experience for myself also, we can be a bit disorganized. Okay. And having a organized data room, you've got all your strategy documents in the one in one place. You've got all your technical documents, your growth plans, all of those in one space. So that if you've got if you need to share it with your team, you can share it with your team. If you've got an investor that comes in that's interested in it, they've got access to knowing what you're. So the admin piece of that, for any entrepreneur, I think it's key to just stay organized. Yeah. And the more organized you are, the quicker you can move. So it doesn't sound, it's a boring piece.
But boring is what makes it work, right?
Yeah. So that's one of the key things. Yeah. The other thing, maybe touching on more the exciting side is always make yourself open. So from an entrepreneur side, one of the biggest things, and I think as doing what I do as a coach in that, one thing that excites me is when you get that aha moment from it. And it's all about making sure that you create a space for the entrepreneur to get to know what they don't know. And there's so many things we don't know, and once we get exposure to access all those pieces, then the whole world changes, the whole world opens up. You don't know. There's as much as I say there's the South Africa's not a strong ecosystem yet. We still have an ecosystem. We still have a lot of partners here. We still have a lot of networks, a lot of resources we can tap into, but you need to know how to access them. Yeah. And even with myself, it's learning along the journey. And I'm still learning. There's more out there. Yeah. Before I got into the funding side, investing side, and things, I didn't know about the whole side of the venture capital and those pieces there. And the funny thing is that the people I'm talking about from the venture capital side and those pieces there are the exact same people I was speaking to before. But because you don't have the language and because you don't have the understanding in those, and that's what I mean by exposure. Yeah. And if you can get that exposure, once you get that exposure, it unlocks something else, because you're having a different conversation with the same person. And that's what I think is missing. And even if we take it right across the board, even SMEs in that, it's they don't know what they don't know. And also working with township entrepreneurs and in that space, they don't have this. They don't have, from a legacy point, they don't have all the support structure. They don't have able to learn from somebody else in those pieces there. So it's if you just unlock that exposure, then they can start building and it's just that unlocking part that is key.
Because that was also going to be one of the questions that I was going to ask, that you've worked across different landscapes of entrepreneurship, like you did mention, even with township entrepreneurs and SMEs, and now you're speaking about it's an importance of exposure, access. Do they know where to get information, right? So what have you seen is the missing part for, let's say, township entrepreneurs, and maybe even to phrase it even more, on the racial side, Black owned SMEs, right? What is the lack? And I think it also touches up also on the ecosystem that you say we have that is not complete. What is the entrepreneurship ecosystem not providing for these kinds of entrepreneurs who might not be exposed or don't have access to information or what they need to know to move their businesses forward?
I'm going to make it simple again and just bring it down, all the way down. The one problem I find in our ecosystem and landscape is that we don't have the right language in. So respectfully, I'm going to say South Africa calls as a startup is not the same as what Silicon Valley calls as a startup. And that mix of that wrong use of language confuses people. And when you've got investors who on international are looking for startups, and then you bring it in and they come to the networks and they say we're looking for startups, then you get these township entrepreneurs, and respectfully again, that don't have the metrics, don't have the scale, don't have all those things to be a startup, and they set up for failure. And then you just so it's all about the language, and it's about if you don't, and I know we want to elevate what we've got, but sometimes I think we just also need to get back to the reality of it, simplified, and then from there build on top of that. And just the what really is a SME? Okay, what's a micro enterprise? What is that? And work within those terms, those contexts, and those pieces there, because I like to use. I always use the analogy. Okay, with all the guys I work with, it's asking you: are you building a 1-bedroom apartment, or are you building a 7-bedroom mansion? Okay, both of those are places to stay.
Yeah.
Okay, a 1-bedroom apartment, that's arguably quite easy to build. Okay, it's a very easy plan. The resources are a lot more simple. Take to a 7-bedroom mansion. You can't just build that. Okay, even when you've got it built and everything, you're still going to have resources to help you maintain that house. Because reality, you're not a house of that size, cleaning, maintenance, all of that is. And it's the same with building a business. Okay, it's got the work I've done and also I've come up with 9 different blueprints of different journeys, and each one of them has I use them as guides. I don't use it as the absolute. It's if you want to build a 1-bedroom apartment, then this is a journey that you're going down. These are the resources that you need to get. This is where you need to get your finance from, and that. If you're looking to build a 2-bedroom place, then this is a journey you go down. If you're building a 3-bedroom place, this journey you're going down, and in a 7-bedroom mansion.
Yeah.
Now, coming back to that startup piece, if you are placing the language with a township entrepreneur that you're building a startup, they expect to build a 7-bedroom mansion.
Sure.
And that leap is astronomical from it. It's not to say that we've had some very great successes coming out of that space. But what you need to do is that if you work with the right language in, and then you get them from the 1-bedroom to the 2-bedroom to the 3-bedroom, then you can get them to the 7-bedroom.
Yeah.
So that's what I mean by language in.
So in essence, you're saying maybe also you can provide just definitions around, because now it actually makes sense, because we would confuse what a startup is, what a small business is, because we've heard debates to say not everyone is an entrepreneur. Yes, you have a business, it just means you are a business owner. It does not necessarily mean that you're an entrepreneur. Or no, you are not a small business. You fall under this category. So what would you say are the different categories for people who actually have businesses?
So,
and how do and sorry to cut you, but how do they then know which one they are?
Yeah. Okay. Let's start with which one you are. Okay. And I always start with, what is your exit strategy? And people look at me strangely and say, why do you start with the exit in mind? So if you know what you want to achieve, what you're going for, then you know what needs to happen behind that to get there. Okay. And an exit strategy. So let me give you a couple of examples of exit strategies I've worked with. Okay. One is that you want to IPO. So that's, we know that. So you know what that journey looks like. Then you've got, I want to pass that down to my kids. That's intergenerational business. I want something that generates me passive income. Maybe that's a franchise business then. I want something, so this is my lifestyle. I'm doing this because I need to pay for my lifestyle. Okay? So it's a lifestyle business. So those, it's all those categories. And like I said, I've got 9 of those, but from my experience of working with others, it's distinctive of what you need to surround yourself with. Because as any entrepreneur, founder, business, and that, you need to surround yourself with the right resources, the right business. The biggest problem there is that if you are a lifestyle business, and I've seen it before, where you start pitching for VC funding, and I've had examples where they've taken money, but because they can't reach that scale, they can't keep up with that. The business falls because they can't reach that. If you're VC backable, you've got a 7 to 10 year journey where you have to reach your the scale that you promised. And lifestyle businesses, they're not geared for it. They don't have the mind for it or those pieces. And it's also because they don't want to. And there's nothing wrong with it. Yeah. Because there's good lifestyle businesses that are making 100,000, 200,000, a million rand a month. So it's not to say that if you're and that's what I'm saying. We need to break away from this stigma. Just because we are classifying you as that type of business doesn't mean that
you are less than.
Yes, because VC backable businesses aren't the ultimate. They're not the ultimate for the ecosystem. And the one thing I've also learned in that the best venture capitalists and that will tell you that you're not a VC backable business. And they're not telling you because they want to bring your company down or talk down your company. Yeah. They just want to say to you, you're not cut out for this. And it might be detrimental to you as a person. Yeah. And sometimes, and over my journey in that, it's also working with the guys in the early stages to say, is this the journey you want to go down? And if not, then let's see what is the journey that aligns with you. Yeah. And it's I break it down. It's always the personal, the personal, the professional, and the business, and I always break it up into those 3. Because the personal is, what do you want from your enjoyment, lifestyle, all those pieces. Profession, we all tend towards having a profession, but the profession should also not dictate what your business is or what job you take. It's a professional journey. But then the business should be a standalone piece. Okay, so and then you map out the alignment between the 3 of those, and then with your exit strategy, that will tell you what type of journey you need to be looking for.
And then if I'm not sure, let's say somebody is not sure, to say, I'm here now. Yeah. Can I evolve into something else? Could I start off as a lifestyle business, and then maybe at some point opportunities come my way, I get more knowledgeable, I get more educated, I get more exposure, and now I feel like actually I want to transition into building a business that I can actually sell at one point, or can somebody evolve from that at some point?
Coming back to the 9 blueprints I've got, that's why I said it's a guide. It's not an absolute, because you can evolve across from like you said, a lifestyle business to a VC backable. Okay. What you also get is that a lot of the first time founders or first time on VC portfolio companies, that they don't necessarily know that they want to become serial entrepreneurs. So you can evolve into it. Okay. But then that's also the coaching side comes into that, because you are traveling the journey with them. But what you're doing is that you're pushing them to their limits, but you're also keeping them within the realm of what's doable, what's possible. And then what it's saying there is that if you don't know, my job as a coach is to get you to know, and that's through asking you the right questions, exploring with you, and going down those journeys. And most of the time, I already have, from having a conversation with you in a discussion and just the coaching conversation. Yeah, I've because I've done it so often, I already know what questions to ask to get them to know what their path is, what their path is.
Yeah.
And if it's a blend of, say, a lifestyle and a venture, VC backable. Because what you can also have is that you can have a serial entrepreneur that has a lifestyle business, a serial founder who has a lifestyle business and has but on the other side has a VC and next to that has a franchise business. So franchise business is set up already; it's a passive business.
Yeah.
You've got a model. You actually don't have to do much with that. Okay. You do the lifestyle business because that's what you love and that's what you passionate about, and you building it. It's generating the income you need and all that. The VC, yes, I'm willing to put in the 7 years now to do what I need to do, and then get out of it. Okay. So it's bringing that and blending those together. But then from a coaching side, it's also just still from the founder side or the team there is this in alignment with your life journey going forward?
And I guess that's where then a coach would come in to help you unpack what the answers are. And very interesting that you're bringing up VC, venture capital funding. Can you maybe just share with us what it is exactly, and what that space looks like in South Africa and maybe even in Africa? And if you want, you can even just compare it with the world, right, globally. Yeah. And what does that mean? What does it look like? And what are those typically VC type of businesses?
Okay, so I think the easiest way to explain venture capital, they are fund managers.
Okay.
And the money that they are using to purchase portfolio companies, the various companies, it's not their money.
Okay.
It's pulled together from investors, from LPs, limited partners, and they can range from things. Now, every venture capital, they've got an investment thesis. So they go and make a promise to their limited partners to say that if you give us your money, this is where we're going to invest it in. Okay. In essence, venture capital is in the business of buying and selling businesses. Okay. So when they start their fund, they have to go and look for companies, portfolio companies, and they have to buy them. Okay. They've made a promise to their investors to say that we're going to find these companies, help them grow, but what we are going to do is in 10 years' time, we're going to return that money back to you, a financial gain promise. Okay, so that's why people ask, well, where does that 7 to 10 year piece come in when you're VC backed for a business? Okay, the thing is that as a fund manager, you've made the promise that this is a return you're going to get in 10 years' time. Yeah. So that's already locked in the time period. Okay. When they start a portfolio, they've got between 2 and 2.5 years to go out and purchase all those companies. Okay. Now, they buy the companies, but then in 10 years, in 7 to 10 years' time. So whether you bought if you bought in right in the beginning of the fund, you've got 10 years to do it. If you bought at the end of that buying window, you've only got 7 years to build your company. Okay, but then what it is then is that you have to have an exit. The portfolio company has to have a liquidity exit in some form or another, and doing that. And that's what I think a lot of businesses don't understand, that your company will be exited because they have to. And why I say venture capital is about buying and selling businesses. The whole industry of venture capital, it's if you just take the two words, venture and capital. Okay, so they're looking for venture and they're looking to place capital. If they don't sell the businesses, where are they going to get the money back to capitalize their next round of businesses? Okay. So that's why and that's why there's that cycle of continuous buying and selling. Okay. So I think that's the easiest way for me to explain venture capital to you. Okay. The different type of venture capitals now also is that every venture capital or VC firm will have investment thesis. Whether it's it's overt or they've got it, but it's hidden somewhere. But everybody always has a investment thesis of what they. So that investment thesis aligns with the promise that they've made to the investors. So they'll generally say we're a health tech fund, or I'm just using examples, not exactly, or we're a tech fund, or we are an African fund, or things. The classifications can either go by industry, they can go by geography, they can go by impact, or all those things there. And so there's a whole bunch of those things there. And that's why, and I'm not saying that this is what you need to stick to, but one of the tips that I'm always going to say to a company is make sure you know what type of business you are. So that if you, I was speaking to agri-tech business yesterday, and they're not calling themselves the agri-tech business.
Okay.
But what I'm saying is that if you're an agri-tech business, call yourself that, because then you start, if you put it there. So VCs, they're in the business, they're in the business of buying and selling businesses. If I'm an agri-tech fund, what businesses do you think I'm going to be looking for?
Agri-tech businesses.
And if you don't label yourself or you don't put yourself out there, you're not going to be found. And it comes back down to, if we want to speak about funding, I always say that the easiest way to explain funding or to grasp the funding piece is everywhere you've got the word funding or you use the word funding, replace it with the word dating.
Okay.
Because that's what it is. VC is or the funding piece, and it's not just with venture capital, it's with all your types of funding, is that it's a relationship.
Okay.
So it's the same as anybody dating and that. You've got something to bring, they've got something to bring. You come together as a union, and then you make something better. Okay. So what you want to do is that if you and this is the thing. If you are, the venture capitals or the funders or DFIs or any of those things have an investment thesis, they know what they're looking for. They know that they from that dating side they already know. Okay. Now you come along and you say, I just want money. Okay. Firstly, and dating principles again. If you meet somebody and the first thing they want to talk about is money. From a dating side, I'm going to tell you walk away. Okay. It's about what is it a match? What does the venture bring? What does the funding bring? How can we join up and do this better?
And I guess it sounds like it goes back to what you're saying, vocabulary or language. Right, where somebody doesn't understand what type of business they are, and then going maybe looking for funding where it does not align with their type of business. And I guess maybe that's why, and you can unpack that, why a lot of SMEs would be rejected, and then they don't understand why could it be they're looking in the wrong places, not understanding.
It's back to the same dating piece there. It's not that you've got a bad business. You're just not the right match. Then you're not the right dating partner for that firm. And that's why a lot of businesses don't understand that. And if what you also don't want to do is get in. So you don't want to be a edtech business and get into agri-tech fund. Okay. The reason why the funds choose what they choose, is maybe also because they've got expertise in that space. They've got resources, they've got market access, they've got all of those. So it makes sense for them to go after an agri-tech business if they're an agri-tech fund. And if you come along as an edtech fund and you go in there, you're gonna get lost.
So who's not communicating it correctly?
So a lot of the programs, respectfully again, and through my experiences, don't understand the funding themselves. They want them to go out there and pitch for any type of money. They want to, and that's where and part of that then is growing it and saying, let's get our understand our clarity right, so that we can have we can guide them properly for the right conversations. It's the lifestyle business that took VC money. That was, and it wasn't just one, it was actually 3 businesses in the one program that did that. And all 3 of those businesses folded. So I got in afterwards and I learned about those programs, and it's speaking to them and speaking to the program, saying to them, this is why it's failed. And the worst part about that is that it's not just 3 failed businesses. You've basically put 3, I don't know how better to say it, but 3 families, at least 3 families are in dire straits now.
Yeah.
Because of bad advice.
Yeah.
And that bad advice could have been simply solved by just having the right conversations or just having the right language in.
So does it go back maybe to the sentiment that a lot of the people that are in decision-making positions that run maybe these entrepreneurship development programs, the DFIs, we have people that don't understand the industry that they're working in? Like, would you say that is the case? And how do you get a position in making such decisions about entrepreneurs if you don't have the experience of?
Again, I'm going to, so it's not all sinister behind it. One of the things that I believe also is that in Africa, and I'm going to grow it, we do a lot of things with heart. Okay, there's a lot of people who want to do impact, and a lot of them that want to make changes in that. But it's head, heart, and hands. Okay, you need to make sure that with the heart, you've got the head with the logic, and then the actions are the right ones. And if I had to give advice to a program, I'd say make sure you've got the head, heart, and hands piece there. That if you're doing it out of the heart, but make sure that you've got the right processes, you've got the right resources, you've got the right language in, you've got all those pieces in place, so that the actions that are carried out, the hand piece, actually works together. And again, a lot of what we do sometimes and I'm generalizing is and I'm I generalize, but there's also a lot of good programs in this country. Okay, but there's also those ones that just do it out of heart. Yeah, and that and it could be misplaced as well.
Could it be because I've noticed with a lot of programs. And I'm just sidetracking, but I really want us to continue around the conversation of VC and funding, etc. Could it be that the programs that we have mix the different types of entrepreneurs under one program with the hope of and where they just end up teaching them generic business or entrepreneurship as opposed to it being strictly for the types of businesses and leading to the types of funding that they should be going after?
A lot of the programs have a lot of mix of businesses in there, and exactly what you're saying. What and I don't think we're going to get away from that, at least in this context. What I am also saying there is that this is where I've also learned my experiences from that side, that even in one program where it's the intake was on a criteria, you're still going to get different businesses under there. So that is why it's important to know, and I'm bringing back that analogy then, is to say 1 bedroom versus a 7-bedroom mansion. Are you in the industry? What's the industry path that you're going down? And even in that industry, you need to know the sub-industries and those pieces there. So a lot of it then also is that coming back to it, maybe equipping the programs with better mentor training, and or because they're going to be the guide. So if you can get them to help them to identify, understand what and the differences between the 30 businesses in the same cohort. What stages are they at? What industry or sub industry they're in? What maturity level they're at? What type of business? Are they the 1 bedroom? Are they the 3 bedroom? All those things. Because once you've got that, and it's a lot of the work that I've been working on there, is that once you've got that, then you know what to apply.
Yes, okay? I see.
The mentoring also is that you don't go in and this is the mentoring model. What we need to also get the mentors to change to is that they need to evolve. So as the business evolves, you need to change your approach, discussions that you're having with them, all those pieces. Because you can't you can't have a startup conversation with a VC.
Yeah.
Yeah.
Yeah. Are township businesses VC backable?
Okay. So I'm going to change your terms there.
Okay.
Every startup is not a VC backable business until they reach milestones.
Okay.
Okay. So a township business, we call them township business, but they're just a business.
Okay.
So so what we need to do is just and this is also one of the things I'd like to is find more gems in that space. And just help them build their business to if so again, it's not looking at I'm not a fan of titles, and I know I've used a couple of titles in those pieces there, but titles are there for understanding, they're not for categorization. Okay. And well, that's my opinion there. So township entrepreneurs is a categorization, but it also sometimes locks you in and traps you. What you want to do is and what you want to say is have a different conversation when you engage with a township entrepreneur, somebody who comes from the township. Yeah. What is it that you want to build?
I see.
Okay. If you want to get to the 7-bedroom mansion, then this is what you need to create around you. Yeah. And there's enough examples of people that have come out from that space who have reached those levels.
So what are those milestones typically? Maybe an example of one milestone that VCs would be looking for.
So if you're always looking at most investment, when I say 90% of investments are based on the founder or the founding team. Okay. You heard the expression that you'll back a strong team. Yeah. Rather than a weak idea. Okay. So the essence of that is that a strong team is going to make it happen. You can give them the worst idea. Yeah. What that strong team will do is recognize it's a worse idea and then change it into a good idea. Yeah. And that's what you want. So again, it's what they're looking for. So it always starts with a team. Okay. You need to know, you need to have a problem. So what is a problem that you're actually fixing? Okay. And it needs to be a one that's big enough, and that's one that people actually care about. Okay. So it's you've heard the expression maybe also the vitamin versus the painkiller. So
vitamins and yes. So what do people need?
Yeah. So your business needs to, your problem has to be a painkiller. And then and this is also where you see the other problem or the challenge in a business is that you've got solutions that don't speak to the problem that they think.
It's a nice to have.
Yeah. So you need to make sure that your solution goes back to the problem. Then the other two things that they're going to look at is, what is attraction? What have you done in the past? So traction is broken into three pieces when I look at it. Yeah. Okay, what have you done in the past? Okay, what's your history? What's your background? What's your experience? What have you done in the past? Then it's looking at what are you doing now. Yes. So you say this is a promise that you're making. So every business when you pitch it to me, you're making a promise. So if you're making that promise to me, then what is it that you're doing currently right now? And then from that promise, what is you painting a picture from this is where we're at right now. This is where we're going to be in the next 3 years.
Can you back it up? Yeah.
So I want to know what that traction is that's going to be going forward. So what are your roadmaps? What is your product roadmap? What's your technology roadmap? What's your HR roadmap? People roadmap? All those things there. So the traction side there, and then so the last one is it's always team, problem, solution, traction, and why am I forgetting this last one now?
Would it be your financials?
No, not your financials. Why am I stamping myself right? It's solution, traction.
Is it on the pitch deck?
It's on the pitch deck, but it's the same thing there. This has really got me stuck.
Market.
Sorry, market access.
Yes.
So you need to have. Sorry. Okay, but basically the fifth piece is the market access.
Yeah.
Okay, you need to know what your market is, that this problem is big enough. It's viable. That you're able to do it. Okay. Now you ask me, what is it that investors look at? That in any business, regardless of whether you're coming from the township space or you're coming from a middle market background or anything, and if you can't provide those 5 things, then they're going to pass on you.
Yeah.
And it's not because you come from a township or you come from whatever background.
Yeah. 2 questions into one.
Yeah.
What kinds of businesses do you think the South African ecosystem needs, right? Can people just build whatever sort of businesses, or is there a specific type of industry or businesses that South Africa needs to really be able to compete on like a global level, right? And looking at the funding side, is then funding accessible for us to actually then be building maybe those types of businesses? Who gets to get funding? Who is excluded from funding? Is this buzzword of businesses need funding really happening, or is just gimmick?
Let me start with that, maybe your last question first. And it's a misnomer that there isn't funding. Okay, there's always funding. The challenge that you have there is that as any investor, you're only going to invest in something that's got good returns, got good opportunities. So it's not that there's a shortage of money. There's a shortage of good businesses. Okay. That's a first question. Just remind me on the
first one was then, what kinds of businesses should South Africans be developing and creating? Okay,
so the business that you should always be creating is one where there's a big enough problem. Okay. So what I'm saying there is that don't try and find a market or find things. Look at what problems we have. Okay. So infrastructure is a problem. Physical infrastructure is a problem. Maybe there's a technology solution around that you can think up. Health is a challenge. Education is a challenge. So look at those things. But what I'm saying there is that look at your immediate surroundings and what is the pain points around you. Okay, because if you want to go back to the township, you might have that problem, but then how many townships are there in South Africa? Okay, now if there's even 10% of people in your township that's experiencing that, if you multiply that, you've got a customer base of close to, it can get to millions. And so we spoke about boring. Boring is great. Fix a simple problem. If you've got the scale, it's going to be successful. Okay. The other piece, and speaking about going national, international, and those pieces that's a discussion also to have, because this is an opinion on my side, but I believe South Africa is falling behind because if you look at the funding, the big players and that, and in Africa you've got the big 4. So you've got Kenya, Nigeria, Egypt, and South Africa that attracts the majority of it. I think Morocco and Algeria is picking up a lot more of the funding as well now. But coming to that side, there is that South Africa is not staying in the top sides of getting that funding. Okay, and they're slipping away because so this is opinion on my side. I believe somebody like Kenya, because Kenya already, the startups there already know that their market size is not big enough. So when they start building, they don't build for the Kenyan market. They build for East Africa at least. Okay? So bringing it back there is coming back and saying to South African businesses, we shouldn't be building South African-focused businesses. If you're going to start, build something that is scaled across at least SADC. And that brings in all the policy controls and everything that we need to get understanding of the language in and all those pieces and that. SADC, how many countries does SADC have? 16. It goes all the way up to Tanzania. If you look at so the population size of South Africa is roughly about 60 million right now. If you're looking at that and you're only able to capture and usually it's between 0.5 and 2%. That's what your target market is. 2% of that is what, 1.2 million. But if you're building something for SADC, which has 340 million,
it's a bigger pie.
It's a bigger pie, because there you already have 7 million. 2% converts to 7 million. So that's why I'm saying, build from, start out from the beginning and say, if you want to build a business like that, then start immediately to go and build, get funding there. Because I believe Kenya's doing that, and that's why they're attracting the funding, because they've got the scale, they've got their businesses are able to go cross country immediately.
So that's what we need to be looking at. And do you think that our policies in South Africa are then supporting for the realization of these kinds of businesses? What kind of support is lacking, or what kind of support, in your opinion, should be there for entrepreneurs?
So I think what we need in South Africa is coordinated, collaborative support, and I think that's where we're not great as a ecosystem. There's too many independents. There's too many people doing their own things. There's too many repetitive pieces. I also think there's we tend sometimes to get very heavy in the early stage programs or the ED programs and those. Whereas one of the things maybe we need to be doing is as an ecosystem coming together and saying collectively let's make a collective change. Okay. But then we also start making sure that we in coordinated phase or fashion is to take it there these are the guys that are experts in the startup phases or the early stages and that. These are the ones that are able to get into the next stages and all that. We've got a lot. We just don't know what we have, and there's lack of coordination on support. There's a lot of our peers that we speak to in that. A lot of them, the ones that know, and we've spoken about the ones that don't know, and they also create the problem because they don't know the entire value chain, and because they don't know the entire value chain, they focused on one portion of one element, and then we're too heavy on one side, and there's nothing on the other side. So in simple terms, I would say coordinated, collaborative support.
And then let's look at across racial lines, right? Where the sentiment is around where you'd hear people saying more people, let's say white people, are being funded more, they get more access to opportunities, as opposed to black people, what is your take on that? And I'm asking it on the basis of also what you just mentioned around collaborative. Do you think across racial lines we are collaborating amongst each other, or we are still secluded in a sense that if we are one country and there's whites or Indians on the side and then there's blacks there, and then how's that coordination looking like for the ecosystem? Do you think it's critical that we all collaborate as well?
We do need to all collaborate. Again, it comes back to the pieces there. I'm strong in dealing with reality in the reality of it. So different parts of the population have had different experiences, different support those pieces. Okay, I'll speak about myself. So Chinese is a minority here. I was born here.
Yeah.
If you look at our generation my generation of Chinese, local Chinese, we my understanding is that there was only 28,000 of us. So we were a minority in every way. Okay, we were part of the in the apartheid regime. We were also minority, and we also had the suppression and all those pieces there, and those pieces there. What we did there is that you'll hear about the super whites or those pieces of that classification. They came in because of the Taiwan and Japanese investment, where they said that if we're going to be investing in your country, that was during the apartheid times, we don't want our nationals coming here and being treated badly. So they created this term called super white, where and that's where the Chinese fell into, but it was nothing more than a class. Okay. Coming back to that is that also if you come back to me being a Chinese and that, I was the first to our generation was the first to get university degrees. We didn't have that access. We didn't have that legacy of all of those things there. So what it comes down to is that, again, those are the realities. It's not about looking back. It's looking at saying, what is it that we don't have, and what do we build from there? And I've looked at other, intergenerational families and those pieces there. Yes, they do have a leg up where they've got the networks, okay? They've had multi-generational education, those pieces there. And yes, they do have, arguably, they've had better support than the rest of us, okay? But coming back to it, it's okay. Let's take what that was, but then what we need to do as a collective and South Africa ecosystem, all of that, if we look past that, we've got all and across our peers and that, there's a lot of people who are willing to share all their information right now. What you need to do is make yourself open to it, to accessing those pieces there. We're all going to have our own journeys of benefits and I guess the pieces that we lacked. And from a coaching mindset, again, it's focus on what we've got, the positives in that, and then we build from there. So it's all up to us. We decide what we do, how we move forward on those pieces.
And the essence of the podcast as well is to always understand who is responsible for what. And I like to ask this question as we come to a close: who is responsible for the failure or successes of, we can say, MSMEs in the country?
So it's me, and it's every individual, because it takes every person to change their mindset to be able to, for a collective change. So it's not a responsibility of any one person, because I can ask you to change, but unless you make that change yourself, you're not going to do that. So I can go to programs and say to them, your mentors need to be equipped differently. But unless they actually understand it and want to change it, they're not going to do it. So the power is within all of it, each of us individually. But what we do need to do then is is collectively, how do we catalyze that so that we can get that collectiveness going in a better way?
And two last questions. What kind of African leaders do we need to actually move, let's say, South Africa, even the whole of Africa, forward to become a very global, competitive nation that we can potentially become, right? And then what would you say, after maybe answering that question, for the leaders, to any ecosystem builder, entrepreneurs, people that are starting businesses, policymakers, decision makers, anybody who is responsible for the outcome of our country? What would you have to say to them?
Leaders in that, I think what we need is we need brave, courageous leaders who are willing to fail and bounce back from it. And given that in the African context, it's not easy. But I would like to see people who are willing to try, and then if it doesn't work, have that resilience, bounce back, and let's go at it again. So leaders who aren't going to do a first try and then abandon it at the end of that. And again, I recognize that it's not easy with the context that we've got. If I had to compare the type of leadership that I'd be looking for, and it's also because I've just been I've been following them, just the methodology of it and all of those pieces there. But the Singapore leadership team and how they've built it up there. What a lot of people don't know is that Singapore only started built themselves up from 1965. And then, I mean, you can go back and you'll see videos of that. They were swampland. And it was through that brave, critical thinking leadership where they had a plan and they carried through it. But there was logic behind it. It was, let's build the building blocks that are going to make us prosperous in the future. And it's not in every leadership has its challenges and its downfalls and those pieces there. But then it's that willingness to recognize those and work on them.
Yeah.
So again, right in the beginning, I said never replicate, but learn from that. So if I had to suggest a model that I'd like our leaders to look at and learn from, is the Singapore model. Yeah.
And last words, like I said, to entrepreneurs, ecosystem builders, decision makers, policy makers, what would you say to them? Where would you like to see us headed to? And maybe whoever is the powers.
So I do believe that in the next 10, 15, 20 years, and I'd like to even stay closer to the 10 years, that Africa is rising. Just because we've got the youth population, we've got the abilities, we've got all of that, that we take note of that and we actually grasp it and make good of it. And then I'm going to come back to that line that I said to you right in the beginning: fail forward, fail fast, fail often.
Yeah.
Because it's only through trying and learning and doing and that we're going to get it right.
Yeah.
We're going to get it wrong many times before we get it right. But if we don't, and we just also need that culture that as South Africans, where if our leaders are doing it and they're getting it wrong, that we also don't hold it against them. That because it's not easy as well.
Yeah. Yeah.
And I think we need to be supportive of them from that space as well.
Yeah. No, thank you so much for that. And for anybody who would like to reach out to you, maybe for coaching, advisory work, and just to follow the work that you do, where can they reach you?
The best place is LinkedIn. So Alan Fok, you'll see me there. It's my email address, alan@thefordcoach.co.za. I think those are the best ways. My cell numbers, it's on my profiles and that. The easiest way is probably to WhatsApp me. That's probably the best way to get to me.
No, thank you so much for the conversation. And I'm sure our audiences are definitely going to learn from it. And there's a lot going forward that really needs to be transformed in our country, the ecosystem. And I think this conversation is really going to open up a lot of light to a lot of people. Thank you so much.